Good evening, everybody. Give me a second here because I am only on a single computer, but Michael and Steve, can you guys see my screen?
Yes, I can.
All righty. Well, thank you everyone for joining. As you guys just heard, we've got Steve and Michael Lamothe, or as I like to misspell it, Lamothe, on tonight. And thank you guys so much for joining us.
Yeah, absolutely, man. Glad to be here.
Great to be here.
All righty. So let's just go through the classic disclaimer as we always do. Nothing that we're going to be talking about tonight is any type of buy or sell signal, any type of advice. We're really going to be going over some different strategies on the backtester and just some overall charts into the week ahead, really trying to highlight some of those features on TrendSpider that make us unique. So just want to get that out of the way as always. And for those that have not heard about TrendSpider or used TrendSpider, TrendSpider is a charting platform at the base. And then we have a bunch of different layers on top of that make us really unique. And I'll go over a couple of those here in a second. But our main goal is to really innovate both the process and mindset of technical analysis, how technical analysis is done. And, the end goal is to build the most fully integrated all-in-one trading platform out there for both retail traders, professional traders, and anyone in between. So some of the main functions that we're going to be going over today, especially the backtester. That's probably the number one thing we'll be going over. But I do want to touch on a couple other things. A couple of these things are going to be case studies from different trades that I've made over the last week or two, and then just some cool things that have occurred on the charts that I want to mention. And we're really mostly though going to be focusing on the strategies that Michael and Steve use, and backtesting those and seeing how they look. So without further ado, I'm going to let Steve and Michael quickly introduce themselves, and we'll go from there and start looking at some charts. Michael, if you can start, please, since you're our first-time guest.
Yeah, absolutely. So it's Mike Lamothe, drop the N, but I actually think that it's a really funny. I think that it's a really. Oh, thank you, Siri. So. Yeah, I think that it's really funny too. I was talking to Jake earlier about it, that well, when it comes to trading, when it comes to stops and trends and all these kinds of things, you're looking more at a zone. You're not looking at an exact to the penny thing. And I think that that's where a lot of traders get tripped up. Like they try to be a little bit too precise, right? Like I won't take this trade because it's trading at 10 cents or 15 cents or 20 cents higher than what I thought that it was going to be, right? So like, let's say that you were going to get in a trade at 100 and it's trading at 120 cents, right? And you think that it's going to go to $120, right? Like you wouldn't miss the entire move for that. Right, so that's how I kind of think of the whole name thing. But anyway, I've been trading now for about 20 years, 10 of which have been successfully. The first 10 were a nightmare. I made every single mistake that one can make in the book. Eventually, the trading god smiled upon me and allowed me to find Investors Business Daily, the New York City Investors Business Daily meetup group. I studied with them over for the first year that I finally was with them. Learned from a hedge fund manager, a couple of full-time traders there, and then after the year was done, showed them what I was doing, and they were extraordinarily impressed with what I was doing, and they wanted to adopt some of what I was doing. That floored me because I was just some guy in the audience, and well, what they were most impressed with was that I found ways to do what they were doing, but to do it in a way that was efficient enough where I could still do it while having a day job. And that's what that was one of the big light bulb moments for me, was that, wow, if there's if I'm able to impress these guys, there's got to be other people that are similar to me that are trying to make this trading thing work while juggling job, family, all that. So that launched one business. Then I spun off that business, and that was around like research and analysis. And I had built a screening app, sold that business last year, launched the business that they have right now, Mara Wealth. And it's all about coaching and education. I do a lot of one-on-one. I have my own chat room on StockTwits, and I'm glad to sit here with great people like Jake and Steve. Spoke to Mark Minervini last week on the show that I have, and have Kevin Martyr, co-founder of MarketWatch, coming on next week. So that'll be a lot of fun.
Awesome. Well, sounds like you got a lot of activity going on in your world, and thank you so much for that introduction. Steve, if you don't mind, just briefly telling everyone a little bit about yourself and your community.
Hey, I'm Steve Burns. I got a few followers on Twitter. I run the website newtraderu.com. I'm financially independent through trading. I have been in the market since the early 1990s and have ridden the roller coasters up and down through the .com and the 2003, 2007 bull market. Successfully got through the 2008 mess, and have learned a lot over the last 25 plus years. I've read hundreds and hundreds of trading books to the point where I've lost count and reviewed most of them on Amazon. Written my own books. I think about 20 of my own books. I've lost count of those as well, but love trading. It's one of my passions. I do it every day, full time, along with running my website and social media presence. And I love the TrendSpider community and platform, and looking forward to talking to about one of my favorite topics, backtesting, which is really just having signals that help you navigate volatility to have big wins and small losses to create profitability. That's all backtesting really is. And trying to find those signals that will give you an edge and capture the swings and the trends in the market and avoid any big losses.
Yep. And, you mentioned something that I thought was really cool. You're always learning, right? It doesn't matter if you've been in the market for 10 years, 10 minutes, 10 decades, if you're just really someone that can live that long. But, you're always learning. I've been trading since I was a teenager, and, I learned stuff, sometimes new things every day, and sometimes the same thing I've been telling myself for, 5 years not to do, and I still do it. And I learn, wow, you got to still work on that. So the point is, anytime you think you know everything in trading, watch out, because that next blow up of the account may be coming your way. So it's always good to stay humble. The market will humble you if you haven't been already. And I'm excited to kind of be able to talk about something that really makes us unique and something we're really proud of at TrendSpider, which is the backtester. And we'll start with you, Steve. We've got Apple up. That's one thing that you wanted to look at. We'll put it up on the daily here, and tell us a little bit about the strategy we're going over.
Actually, with my years of backtesting, even before I got on the TrendSpider platform, I went through all the moving average crossovers. Moving average crossover signals when you buy based on a shorter-term moving average closing above a longer-term moving average, and then you sell when the short term closes back under the long-term moving average. So it does filter out a lot of the volatility. If you do the 10-day EMA alone, it's a good discretionary signal to capture a swing or a move, but mechanically the volatility will chop you to pieces. And while the 50-day also is a good one to buy, growth stocks, and stocks are in uptrends on a bounce back to 50-day at times, you can also have your head taken off when it's lost and it plunges. So the 1050 crossover does give you some volatility filter and get you on the right side of the trend and keeps you there until you have the signal to get out. So pretty simple crossover signals. It's something that the moving average, something Paul Tudor Jones, Jerry Parker of the Turtles, and several other legends talk about. So it's a really good trend filter, not as good in volatile markets or sideways markets, but the whole purpose of these back tests are to show which ones you can use for most efficiently. These are actually the ones I found through my own back testing through multiple indexes and stocks, as well as I came across a research report where someone else also did it, and they came up with it. I think it was a 48.5-day moving average crossover with a 11-day or something, which was close to what I found. But what I found in my own research is a 1050 crossover, usually an EMA exponential moving average, is the best optimized crossover signal to capture trends. And you don't have to use it purely mechanically. You can use it as an entry signal and then lock in profits when they've met your goals at times, so you don't have to ride it all the way down if it does get to really extended from each other. If the 10's way above the 50 and you want to lock in profits, you can use the entries mechanically and the exits just more discretionarily if a market gets overbought, or you can trail up with a 10-day alone when you want to lock in profits. So that's what I have set up today to look at.
So I'm just curious, is there a reason that you use the EMA versus the SMA? Is it just to kind of capture that most recent price action within the equation, or?
It usually backtests better. The EMA changes faster to more current price data, so usually it gets you in faster and gets you out faster most of the time.
Yep. All right, cool. So what we have here is we do have that EMA 10 Steve was mentioning, which is the orange, and then we have the yellow, which is the EMA 50. So what we're going to do here is simply just backtest his.
Jake, is that the monthly down there? It says monthly EMA.
Yeah, I'll need to change that to daily. Mike wanted to do a monthly test, but this is now the daily here. So what you can see here on Apple, let me just go back to Apple. We just quickly did a back test without having to do any type of coding. So, just one thing that's really interesting about the whole process of doing back testing or alerts in TrendSpider is you can create these conditions without actually having to go in and code anything in. So, most of the time, if you want to create a set of rules or a set of conditions that need to become true in order to make that entry or exit true, you really, it's important to kind of get all that information and then kind of easily put that into a visual interface rather than having to use Python or any other type of coding language. So what we did here is we put in Steve's conditions. The EMA 10 crossed up through the EMA 50. So that's our entry. And our exit is the EMA 10 crossing down through the EMA 50. So it's really a pretty simple approach, as Steve mentioned. And you can see here on the chart, and I really want to, this is pretty incredible, I gotta say. What you can see here is our last entry that this occurred. And you can really see how, you've got the price action really respecting this average move for, up until about a month or two ago. So it's really powerful to be able to, see this and be able to, be able to backtest it so quickly. Now,
I'm not sure why, Jake, but that's not matching what I have on my daily 10-50 crossed up, crossed down back test.
Yeah, I don't know what the issue is here. Let me.
All mine show beating, buy, and hold.
That is weird. Let me just make sure I've got the entry is the EMA 10 crossed up through the 50, the EMA 10 crossed down through the 50. We'll go ahead and test that.
I think that it's so great that you could go and just plug this stuff in and see if a strategy is viable, right? Rather than having to do all that stuff manually. Like, you still want to do manual work. You still want to do forward testing, right? Because you want to see like how this stuff, like how it actually feels when you're in a trade. But like to just see if something is viable or if like, oh, this actually doesn't work. It's such a time saver.
Yeah, and I'm gonna have to look at that, Steve, because I'm not sure what the issue is here. But let me see if I go to the chart and it will do reset, test, see on chart. That is odd. Well,
that looks better, that one.
Yeah, it's definitely almost beating buy and hold. Yeah, let me we'll take a look at that. Let's move forward into your watch list. Is there a particular reason that you are watching these, just simply because we recently had this cross, your Apple, your SSO, all of those?
No, I always filter for the best leading stocks that have an edge in the market. Some of them are very similar to the canned slim stocks, like Michael trades, like the Investor Business Daily growth stocks. A lot of them I get from the big cap 20 of the IBD's big cap 20. They're the ones that are growing earnings. They're the ones that have a huge edge in the marketplace. They have one that have huge ecosystem, similar to Warren Buffett. He likes companies that have a moat around their competition. Things that are growing and dominating, like an Amazon or an Apple or a Google, even an Etsy or a CarMax, things that are Goldman Sachs. Things that are dominating their market and their sector is what I look for. I want to go after the leaders in each sector.
Got it. That makes sense. And this is something that I like to do. Um, do you really stick to a very small group of stocks so you kind of get an idea how the personality of that stock is? Or do you kind of just look and see what's recently crossed and you kind of just start looking at it from there?
No, that's exactly right. I'd take about a 20-item watch list of the best performing stocks, the biggest leaders, and that also backtest well. Most of the things that I trade, I've already run all the backtest of 1050 crosses, the 520 crosses, as well as some 30 RSI dips, 200-day moving average dips, things that have built-in demand. You can buy a dip in Amazon and be more confident of a bounce, or an Apple than you can, buying a J.C. Penney's or a Sears holdings before they went under, or a Macy's. I want to have even index ETFs, leverage index ETFs, and stocks that have built-in demand where money managers, hedge funds, investors, people want to buy them. That's a big thing for me. I want to have, built-in demand for these stocks. I don't want to try to go dig in the dumpster looking for some dead stock and hoping it bounces out of the single digits.
Makes sense. Yeah, it's that's one thing that I learned, pretty quickly is if, let's say that you're looking at a moving average cross or a MACD cross, just because the MACD crosses on a specific stock or a moving average pair crosses doesn't mean you're going to have the same reaction on every stock. And that's why the back tester is so important. So you can see, okay, stock A has an average return of 10% after the MACD crosses up, where stock B may only have, a 3% move to the upside. So it's really, it's really powerful to be able to, quickly be able to do that without having to manually back test, because, it used to take me 2 hours to manually back test 2 years of data on a chart, just because, one, it's very precise. You got to make sure that the MACD actually crossed. You have to zoom in and see, oh, wait, is this actually mathematically higher, or does it just visually look higher? So, taking all of that out really, really just helps the whole process. So this is Apple. We clearly have a nice cross here. SSO is this just Ultra S&P? Is this something that you trade pretty often? Is this something that you more swing trade? Or we talked a little bit about your time frames. It kind of depends on what the market's kind of doing, right? Even if a back test, says one thing, you still got to take into account the status quo of the market.
Yeah, well, most of my entry signals are manual. Where I see the crossover, I take the entry manually. If it doesn't work out, I'll have a small loss. And I will adjust my position size based on volatility. But I do take most of the entries mechanically, and then I will manage it. The crossovers give me a model within to work with, knowing it is an uptrend and the big picture is profitable. And it even in most of these cases beat buy and hold in both returns and in drawdown. Or if it doesn't quite beat it in return, it has much less drawdown, because it does get you out and into cash when a downtrend does begin. So you're not holding to a big loss when the 10 crosses on 50.
Makes sense.
You want me to try to use my own screen share with TrendSpider and just click through my watch list?
Yeah, you can. Do you want to share your screen?
Yeah, enable screen sharing. Share. See if I can.
Let me unshare mine, and then you should be able to share yours now.
Let's see. Enable screen sharing. Well, it's not giving me a share button, so I can't click it. Maybe if I do. Yeah, it's not letting me click share.
That's odd.
Oh wait, maybe this will work.
Was it in maybe a different window?
Yep. Now you can see me. Yes, yep. That's what it was. Okay. Here's my setup. The SSO. Here's my back test. Preset test. This is what I got on the SSO 1050. It did converge recently for the back test, but look at all the outperformance where it kept you long during the 1050 cross and put you back in cash So it kept a lot of the earned profit, from 2010, 2011 versus buy and hold.
Makes sense.
And so when are you exiting, Steve?
I usually exit around the 70 RSI on the daily. I get out, lock in the profits. I will at times, if it breaks above the 70 RSI and keeps on going and it goes parabolic, I will continue to hold to maximize those opportunities at times. Here's my Apple back test based on the 1050 cross. Look at the outperformance in this based on the long. This one goes all the way back into the beginning and capture the big moves, as it exploded up after the iPhone move. Another good thing about a 1050 crossover filter is that you don't know in real time. You don't know what's going to be the next Apple or Amazon. A lot of things you don't know in real time. But if a stock goes into distribution, you are out. If the 10 crosses on the 50 and you start having a big plunge like you saw recently in a Tilray or back with Groupon when it collapsed, or GoPro, or the ones Snapchat, it will get you back in cash. So you will be available for the upside, but you will be out when it is in a downtrend. You will not be buying long when the 10 is under the 50 for the trend following signal. Now you might have another signal, a bounce back out of oversold territory, but the crossovers anyway will keep you out of trouble for the most part. So let's see. Etsy is another newer stock that's really one of the few things that can really go toe to toe with Amazon in its own way. And Etsy, look at the outperformance overall in the history of Etsy, where you didn't have a lot of signals early on, but you did have a huge equity increase that actually you had less drawdown and you had more increase in Etsy before the recent sell-off. So you will have up and down. They're not holy grail signals. The whole purpose of these are just to keep you on the right side of the trend. If you ever hear, the term, a trend following, this is an actual mechanical trend following type of signal. Here's a CarMax back test with a 1050 crossover. I mean, just crazy, the outperformance versus the buy and hold on this. It just you don't get faced with the drawdowns and the plunges. It really can keep you safe during financial meltdowns as well. For the stock market, 2008, the crossovers will tell you to go to cash instead of staying long equities. When stocks as an asset class are under distribution, a hurricane will sink all ships. So when you see the 10 cross over the 50, that's when you want to get out and go to cash. But this is an example of mechanical trend following signals. When 10 closes over the 50, you go long, or you at least think of going long, and you stay long bias. But when the 10 crosses on the 50, that's when you can change your bias to not going long. Short does not backtest as well with the 1050 cross under, because stocks as an asset class go up over time and make all-time highs, especially based on the indexes. When you try to go short, you're fighting against the CEOs, the executives, other investors, people buying the dip, the Fed, the politicians. It's a hard fight on the short side. People think, oh, I'll just go short. But generally, overall in the markets, you will lose more money with false short signals than you will make when it finally does drop. That's one thing I've really seen in back testing. When you have a bull market like we had from 2009 to 2019, there's very few short side systems that are going to be profitable in the long term. And it's funny to me, people think it's so easy, especially in the stock market, to go short versus long. It's the same. It's not the same. Downtrends are much more volatile. They move much more wildly. And the biggest rallies happen during bear markets and downtrends. And most of the gap ups happen during downtrends. So it's much harder to trade the short side of the stock market. The best angle for selling short would be to find individual stocks under distribution because they've lost their place in the market and they're being sold into and they've lost their key moving averages. That's the best strategy you could have for short selling. But, the indexes, they're created as systems to go up over time as they bring in the winning stocks and they push out the losing stocks. And the S&P 500, the Dow, the reason they make all-time highs because they change their components and they go with the winners, sort of like a system itself. So it's a very hard game to play the short side on this. But, I love that TrendSpider has made the learning curve so much easier. You don't have to learn to code. You don't have to use, I used to use Excel spreadsheets to back test those. I still do for some systems that are beyond the capabilities, but TrendSpider, more than anything, you're paying them to save yourself time and learning how to code or hand back testing or using spreadsheets. So it's a great, great tool, and I highly recommend it to my people. and the people that ask me for recommendations on backtesting our charts. I also love the candlesticks with the visual representations of the volume distribution on a daily range or a weekly range.
And one thing to mention with this is you have to know how to be able to actually use the tool, unlike myself, where I completely typed in the wrong moving average. That's why we're having such a problem there. I typed in since the 200 SMA was the same as the EMA 50, I accidentally turned off the EMA 50. So that was the reason we were actually having troubles there. Every time that you think there may be something wrong with technology, it's usually the user error, at least for me. So that was completely my bad, guys. That was just me accidentally clicking this, the 12, SMA 12, rather than the EMA 50. So if we go back here and test this should now show up the right way. So sorry about that.
I assumed I was making some mistake myself. I thought,
Yeah, no, that was just me. So here we go. There, everything lines up a little better now. So anytime you've got your entry, you've got your cross, the EMA crossing up, and then anytime you have your exit is when that condition is crossing to the downside. So that was the issue we had there. So let's go back to Apple here. And, you'll see here that it's a little easier to see these entries and exits. So just wanted to mention that. We talked a little bit about Steve's approach, and I wanted to go over to Michael's approach, which I think is a little bit of a longer term strategy, Mike, right?
Yeah, so this was a strategy that we tested out in the New York City IBD meetup group. There was a study done just to see, well, what would happen if you wanted to be long, right? Like you wanted to just be long the S&P 500, right? Like that, and that's a strategy too that a lot of Warren Buffett points to this. If anybody here has read the Tony Robbins book, Money Master the Game, they're all pointing towards this strategy. If you're somebody that doesn't want to be an active trader and you want to be active in the market, right? We should. It's a good thing. It continues to move up. And so what they're saying is buy the S&P 500, buy the Spider, the SPY, because one, it's dramatically cheaper than a mutual fund. You don't have to deal with the fees and the taxes of them trading in and out of it. And it's going to outperform most of them, right? So just buy that. Well, the study that we looked at was, well, could we do better? Right? Like, could we do just a little bit better? What would happen if we missed the drawdown in 2000? What would happen if we missed 2007, 2008? Right? Like, could we have gotten out of that and missed it? Well, if you simply bought or entered on a move above the 12-month moving average and got out when price fell below the 12-month moving average, and this is just at the end of the month, right? So it's not like you have to be super active with this. You're basically looking at it once a month, and you're either in or you're out, right? And if you're already one of those, then there's no action to take unless there's a signal, and you end up dramatically outperforming, right? Like, well, look at this. What period is that? That's 739% versus 564% for a buy and hold, right? Like for something that you just need to be active once a month for 5 minutes, like, geez.
Yeah, and it's interesting to see how much chop there was in the last 2 years. You can see, the system took the entry, but then it exited almost immediately after because you had some of the kind of false signals going on here.
Yeah, and so that's one of the, and so again, one of the reasons why I love what you've done with TrendSpider, right? Like you could go back and see, like, yes, there are some periods where you're going to get chopped up a little bit, and it's going to tick you off, and you might say, like, you know what, that guy Michael Lamothe, what a bogus strategy, like screw that guy. But then you see something like this where it shows you all the data. And yeah, you know what? Like there are some periods where you get chopped up, but you end up missing 2007, 2008. You end up missing the dot-com bubble, and you end up outperforming so much just with this simple strategy. Again, like if you don't want to be super active, this is solid.
Yeah.
Oh,
sorry. Go ahead, Steve.
I like what one of the trend followers that Michael Lamothe interviewed for his trend following book said. It's like riding the bucking bronco. That's what following the trend in trading is. How can you ride the bucking bronco and make the money without getting thrown off at the right time?
Yeah. Yeah, exactly. And you don't have to sit through like those drawdowns too.
Well, it's really interesting to see here since 2002. You've really got some very strong, or way before that, even since the backtest started in 1994. Notice how beautiful these entries and exits were. Right? It was a nice, textbook kind of entry and exit. Now we're starting to get a little bit of that chop, and as you mentioned, sometimes you're going to get chopped out, but the biggest thing in trading is sticking to your rules, whether that's, I'm only going to put in, 2% into a trade of my capital, whether that's I'm only going to buy the stock when it does X, sticking to a plan. It doesn't matter if you're going to get chopped out. Just sticking to that plan over time is going to make you a long-term, successful trader rather than, worrying about if you got stopped out a couple times. It happens. It's part of the game. And, you just wait for the next entry.
Exactly. And well, one of the things that you have done here too, that's so beautiful is that like looking at this, it's like you get the textbook part of it, right? So you know that it works. Then, what everybody would need to do, like whether it's this, whether it's Steve's systems, whether it's whatever systems they come up with, then like actually go through and put in the reps to trade that system, right? Like to also manually backtest or manually forward test. Trade it in a demo for a little bit, then try to go in with some capital, have some skin in the game. You don't want to go in with all the money that you have, but enough where if you lose it, it's going to sting a little bit, right? So that way you start to put in those kind of reps too. Same thing as if you were going to the gym, right? Like you could read a book about doing push-ups. You're not going to get any of the results. You actually have to go in there and do the push-ups. So that's what this is going to be, and that's how people are actually going to succeed at this by putting in those reps. You can see right here in TrendSpider that this thing works, but you still have to ingrain it in your head because when you start to see the market's moving against you and you haven't put in the reps yet, you're gonna get scared.
Yep, and it's something that was mentioned by a pretty big influencer this week, Umar Ashraf. He mentioned something that was really, hit home. And he said, if you don't know how you're going to act on a drawdown or something, how are you going to take the trade? It's easy to backtest and say, okay, there's going to be a 20% drawdown possibly. But then when that drawdown actually comes and you start to panic, you're not actually, knowing how you're personally going to react, which could completely mess up the trade. Because at the end of the day, a messed up trade is usually because you don't follow a plan or you make a impulsive or rational decision because of some type of emotional, whether it's panic, whether it's euphoric, and backtesting and all of this is great, but you also have to actually know how you personally are going to react if you have to go through a 15% drawdown before there's a reversal. So, that's something that was just really hit home for me because it was like, man, I didn't even think about that. You got to know yourself and know what your limits are or what your panic threshold is, so you can accurately create a trading plan that works for you.
There's a question here from Ed Michaels. Can the speaker repeat the entry exit signal slowly? Ed, which one are you talking about? Are you talking about the one that I was talking about with the S&P 500, or are you talking about one of Steve's? For Steve's?
Steve's was just the
for me.
Oh, for Michael's?
Yeah, so with this is super simple. The entry on the SPY, when price closes above the 12-month moving average, that triggers a long entry. When it closes below the 12-month moving average, that triggers the sale, and that's it. This is meant to be a long-term strategy, and it outperforms a classic buy and hold. And a classic buy and hold would outperform pretty much any mutual fund out there. So go with the ETFs, like if you have like an IRA or something, this is what I was doing when I was still working full time and I had my 403b. Right, I had it set up with Vanguard, like it was giving me money through the employer, and they had a basket of mutual funds, and one of them was a simple fund that mirrored the S&P 500. I forget exactly what they named it, but it was one like that, super low fees, which is what I wanted, right? Because like, why should I have their management fee if they're just going to have pretty much the same performance as the market? So great, let me go and buy that and then follow this.
Yeah, and for everybody who has a 401k, they usually have an S&P 500 index mutual fund in your 401k, and it's a great thing to mirror these SPY signals with a S&P 500 mutual fund because it's basically the same thing, like Michael said, lower fees. But that's great to use a 401k with some trend following strategy, so you don't have to suffer through a 2001, 2002, or a 2008, early 2009 meltdown by getting out and having some signals to actually take you to cash. So it really works out well. Of course, with 401ks, if your company matches, the first thing you do is have the maximum match they have, so you can get a 100% return right off the gate, and then use some of these systems to try to grow the capital over the years.
Makes complete sense. One thing that I really wanted to point out here, and this is something that I really love about the backtester, is this kind of forecaster we have here, right? So this line, there's a couple lines here, but let's just go and remove both of these. So this particular line here is the mean trade return of all of the backtested positions that we backtested here since 1994. And this is your average return actually painted out on the chart. So what you can see here is we're actually underperforming the average right now based on just simply looking at the price action versus this mean line here. So this is our mean return. Let's just put in, the 75th and 25th percentile, and you can see we're finally actually just getting into the bottom of this percentile. So even though we've been absolutely killing it the last few months, we're actually not doing that great if you compare it to some of the other times that this has occurred in the past. And so, if we go to the min-max change, this is your biggest move on the top that's ever happened, and this is your smallest move. And notice how we're actually trading right near the bottom of the smallest move that we've ever had. Obviously, all of these moves went to the upside. But notice how if we were trading near the top of this, back test, we would be trading up in the 325s if we were, outperforming most of the other entries and exits. But for this particular case, we're kind of just doing average, actually a little below average. So this is something that gives you a really quick way to visualize and see in relative terms, how is the price doing compared to other times this condition has been met. So, it's something that's very powerful. I use it all the time, especially in longer term kind of trades. I used the MACD cross on the SPY, and we had a really nice forecasted move, and it's kind of followed that exact move. So one thing that I wanted to do before we kind of wrap this up, we still have a little time. I did want to go over a couple case studies that have happened over the last few weeks or so. And before I start that, I do want to just show this example of SPY. And, something that is really, really important if you're using TrendSpider is to make sure that you're using the alerts. And the alert is simply by just right-clicking, creating an alert at the drawing, and then increasing or decreasing the sensitivity here. So rather than us having to wait for the price to hit this exact line, we're able to capture some of that margin of error. And you can actually see, in this particular case, this purple area from this line down is $1.7 below that line. So you have a margin of error around this line of $1.70. So that's something I like to use a lot. Price action's not always going to hit an exact level. As Michael was talking about earlier, you're kind of doing more of a general kind of estimate rather than really having to hit an exact precise number. So yeah, sure, sometimes you're going to get filled at your exact, your order, but there are times where you're going to miss it by a few cents, and being able to use this sensitivity feature really helps with that. So that is something that I personally am kind of getting set up for next week. So I'm personally going to just, I don't really trade SPY, but I use it as a benchmark to watch other stuff. So for me, I want to know if we get about, within 50 cents of this particular line, and I want to know if we touch that line. So in this case, we'll just do 1.618 resistance above and have it expire in, let's say, 10 days, and we'll have it triggered one time. So now, on SPY, if we hit this tomorrow and I'm in the middle of something, I don't need to be watching the chart all day. The system's watching these levels that I want to watch right away. So that's something that I really use every week. And I know Dan, our CEO and founder, he uses more alerts than I think anyone. So he definitely makes some good trades on these. It gives you the ability to remove some of that emotion and just trade based on a breakout or a breakdown. And it really kind of makes everything a little more efficient. So that's what I wanted to mention with SPY. Another really interesting case study that happened this week was Disney. Disney was absolutely a really great, fun trade. And I want to mention, I personally trade, but that doesn't mean, follow me or mimic my trades, anything like that. I just want to kind of speak from experience to show you guys kind of some real world examples here. And one thing I did last week, I created a anchored VWAP right at this November 8th gap up. And you can see here on, I think this was Tuesday, you can see how if you were looking at a regular candle, it looks like we barely closed above this line. And so, obviously for me, anytime that I've got a hollow red candle, it shows me that even though we closed below the previous day's close, buyers were still in control from the open because it's hollow. And so what you can see here, though, to confirm kind of that short-term bullish setup is using the raindrops. And the raindrop is something that is a volume-based candle for those that have not heard of a raindrop before. And it shows how volume is flowing throughout a particular period. So in this case, what I was doing here was I was looking and I was saying, okay, well, sure, we've got, and just keep in mind, this is the exact same chart, just the raindrop versus the regular candle. And what you can see here is two different kind of views of what's going on, right? We've got this candle here on the right, which, as I mentioned, is showing that we barely closed above that line. But in this case, for the raindrop, you can see how all of that volume was aggregating above WAP, and then you had a nice 2-day continuation here until you got to the next anchored VWAP, which was this kind of impulse move here, and then we got rejected nicely, and now we're pulling back. So this is something that, when we first introduced raindrops, I thought the blue raindrop was really going to be what really made this unique. But honestly, the way that you can look at these areas above or below support or resistance is crucial, because you can see, a lot of people will say, well, how do we know that these weren't sellers? Well, we know they were sellers because somebody had to sell it to the buyers, but we know that the buyers were the ones that were really aggregating, and keeping the price above this VWAP and accumulating all of those shares above the VWAP, and then you had your continuation up. So this is what we call we'll call it a balloon, but a balloon is more when you're breaking out. But it's the same type of setup, right? You've got a lot of that volume aggregating at the top of the range, and then you've got a nice continuation, for 2 days here before you pulled back. So this is really showing the anchored VWAP, which is incredibly useful. And then, showing how you can utilize those raindrops when using the anchored VWAP. Anything that you guys want to throw in there while I'm going over these, please just feel free to butt in.
I think that it's great that you have all these different options to look at the chart out. Something that's new for me, I've been trading stocks now for 20 years, and I just started to also look at Forex, and I'm taking a Forex course. And part of that course is using candlesticks. And I was a guy that forever, growing up within the O'Neill system, was just looking at very simple high, low, and close. Like they don't even look at the open. And so it's interesting like how the story is like told just a little bit differently when you're looking at a candlestick versus looking at a bar. Then you start to look at these raindrops, and it's like adding a different flavor to the story. And I just like to see like everything as like different angles of the story. Like if you were like driving down the highway and like you see an accident on the side of the road, like there's a million different points of view of that. That's kind of like, well, what this is, you're getting all the different points of view to see like what's going on and how. And then at the end of the day, like it's still going to be up to everyone in this room to make their own decision, but you're able to make a much more informed decision.
It makes complete sense, and we're excited that you're finding value here, and we really want to be the innovators of this particular industry. There's been software around for quite some time to look at charts, but nothing's really changed in the last 10 years, and we really want to be the ones to disrupt the industry and create something that not only adds value but is innovative and a new way of thinking and a new way of doing the whole process of technical analysis. So thank you for that, Michael. And one last thing that I wanted to go over. So we do have the anchored VWAP, as I mentioned. All you do is right click, go to create Alpha Trends anchored VWAP. You just right below it, and it's set up, and then it's kind of locked in. That is anchoring the volume weighted average price. Now let's go to a different example, which is Shopify. I'm sure many people are familiar with this one. It's easily, I think, the most kind of talked about stock right now, just because there's so much hype around it. Just the stock just absolutely rips quite often. And so one thing that I wanted to mention and kind of go over as a case study from last week is the anchored volume by price. So we just talked about the anchored volume weighted average price, but this is actually the ability to anchor the volume by price from a particular area. So in this case, what I like to do, and this I was taught this by Brian Shannon on how to anchor things, but I generally like to anchor from a pivot area, either a reversal. In this case, we had, this was our reversal point on November 8th. So that's where I'm anchoring all of this volume from. And notice what happened here. We had a ton of volume aggregating at this current price level around 370. And, when you have this much volume holding, supply is being eaten up. And if there's not anyone else to, supply shares to the market, the price has to go up in order for supply to come back into the market and continue selling. Because, if there's no one to buy the shares, you have to raise the price to get someone to finally bite and sell you your shares. And this is the same thing. We had all of this volume holding here. Supply was drying up, and then you just had your absolute rocket on Friday. And what's interesting here is notice this is a great example of actually our balloon breakout, right? So we've got this pretty strong area of resistance. It's not perfect. It's never going to be in technical analysis. But notice how we really had a hard time breaking this 377 level. And then finally, when we did break it, notice that we've got that balloon breakout, right? We've got a lot of that volume, especially during the second half of the day, aggregating at the top of this range. And it's really showing that buyers are in control. And any sellers that did come in during the second half of this period, there were buyers here to gobble up those shares at, near the top of the day's range. So this gives you an idea of really who's in control. Is it buyers? Is it sellers? Where is the volume flowing? And it's a really great feature. So using these together. So for example, using this anchored volume anchored volume by price, and then using the raindrops together can really give you a unique view that you may have not thought of before. So that's something that's really unique and a really cool case study. I wasn't able to take this trade. A lot of the time Shopify just has a crazy spread, and I really, I guess I could just put market orders in, but excuse me, limit orders. But it's just one of those ones that just has a massive spread. But it's fun to watch. It's fun to do analysis on, and it was a really cool case study in the last week. So if you haven't used anchored volume by price, make sure you anchor it from an important level. I like to anchor it from this reversal point because it's kind of changing the status quo of the market, and it's something that we recently added. So make sure to check that out. The last thing that I did want to go over here is DIA, and this is something that we're kind of showcasing the automated trends feature on. So I do want to mention here that obviously I drew this horizontal area, but this ascending wedge was completely captured by the platform. And it wasn't just like these are the two lines that showed up. What I did was I turned on the trends feature, and then I had all of these different kind of setups here. So in this particular case, you can easily go in and then lock in these areas without having to do anything. And if you're looking at this, you may say, man, that's a lot of that's a lot going on in this particular chart. But it's there for you to go in and actually kind of pick which lines you want to lock in. So in this case, maybe I want to lock in this particular setup here. If I delete these and go to the trends again, I could make a completely different setup here. Maybe I want to capture more of this kind of channel here, turn off the trends, it's locked in, and now I go on to the next step in my process. So, TrendSpider isn't there to replace what you're doing by hand or pick your trend lines for you. It's there to highlight some of the trend lines that you may have thought of based on whatever preferences you're in. And it gives you some ideas for the future, or not the future, but it gives you some ideas for possible, trend lines to look at in the future, and possibly ones that may be significant. And the thing is, it's kind of removing that bias. So you still have the ability to discretionarily choose your lines, but you're not just drawing random lines. The system's kind of taking a set of rules, applying those rules, and then showing you based on those rules which trends are kind of setting up in the most relevant way. So, that is pretty much tonight's show. I don't want to take too much more of anyone's time, especially with Sunday Night Football on, for those that like to watch that. And, I did want to go and answer a couple questions now, and kind of answer anything that, answer anything that popped up. So I'll go to the questions tab here. Futures will be available. Well, futures are available. They're delayed right now, but they will be hopefully fully available real time when we do have that brokerage integration, which I don't want to give an ETA on because it's just, we don't want to disappoint anyone or give somebody a time frame that we may not be able to hit. So we're aiming for the second half of 2020 to get this brokerage integration in, and we'll kind of see where that goes if we can hit that deadline. But we still have a ton of things on the roadmap before that, and we're very excited. How does TrendSpider Backtester compare to Ami Broker? I am not too familiar with this software. Steve or Michael, are you guys familiar with this one? AMI Broker?
Nope.
Ami Broker.
Ami Broker. Are you familiar with it, Steve?
All I know is that it requires coding. TrendSpider does not require coding, so you might have more functionality with Ami Broker if you can write code for the backtest you want to perform on the price data. But TrendSpider is multiples faster if you don't want to learn how to code. So I would say the edge is in the user experience for TrendSpider.
Perfect. Yeah, I will have to check that one out. But that's really a big value proposition, as Steve mentioned, is not everyone knows how to code. It's a pretty niche kind of thing to be able to do, and everyone can come up with a set of conditions, but they can't actually code those conditions in. So being able to create a visual interface is a big help. With planned brokers, is there a short list of ones that are progressing? We do not have any names of brokers or anyone that we kind of have anything set up with yet, and we'll announce that when we can. But for now, it's just kind of getting that project started, and then we'll kind of go from there. But we do have a couple brokers that we've been talking to, but it's not going to be brokerage integration is here, integrate any broker you have. It's going to kind of be a one-by-one type process. Now, Roku, we got a question about Roku. I can quickly go over the Roku chart, but we don't really have too much more time here. But let's just quickly go to the Roku chart. It actually is an interesting chart into next week. Roku is one that reminds me a lot of TNDM. So on Roku, we've got, let me just split the screen here, and you'll see that we've got a pretty strong breakdown, on the daily chart. Let me go to the hollow candles here. Turn this to weekly as well. And what you can see here is, I'm not sure why my trend lines aren't there, but the biggest thing that I was kind of looking at was this support that recently broke, and the system's not catching it right now, but it probably will here if I refresh it. Let's see here. Yep. So you've kind of got two important levels here. One of those levels already broke down. This area is seeming to, kind of hold this area. And notice how I didn't draw any of these. I just turned on the trends and locked them in and, kind of moved on. So daily, we'll have to see what happens. The weekly chart doesn't look a ton better, but, what am I to say that it doesn't look good? It's just, it's just a candle. Candles can easily reverse. This looked like a horrible candle too, and look what happened after it. So, it's one of those things where if I turned on the trends for the weekly as well, this would definitely be the trend line that I'm looking for to the downside. And you can see here that, if this did continue down, this trend line here is around 120. So obviously this trend line is a function of time, i.e. the longer we go, through this time period, whether, that's in January or February, this price level continues to rise. So, it'll just be interesting to see where this finally does catch a bottom and a bid comes back into play. So that is Roku. That's all the charts we're going to be able to get to tonight, everyone. Thank you, everyone, for joining. And, if you have any other questions, please definitely feel free to reach out via hello@trendspider.com. I did want to, once again, thank you guys so much for joining Steve and Michael. It was a pleasure having you on, and it was great to hear your strategies and how you utilize the backtester. And if you guys want to check out their websites, make sure to check out newtraderu.com for Steve and marawealth.com for Michael. And once again, guys, thank you so much for joining tonight.
Thanks for having me, Jake.
Hey, you're very welcome. All right, everyone, that is it for tonight. Thank you so much again. If you have any questions, like I said, hello@trendspider.com, or just reach out to us on our Twitter page on our TrendSpider page on Twitter. We try to be as responsive as we can. Sometimes there's just a little delay there in response. But everyone have a great week ahead. Thank you so much for joining. Once again, guys, thank you so much for being guests on tonight's show. And have a great holiday and a happy new year.
Thanks so much, everybody.
See ya.
Talk to you later.